Good evening, everybody. Welcome to Verified Investing Live. My name is Gareth Soloway, Chief Market Strategist and Pro Trader here at InTheMoneyStocks.com. So first off, guys, I really hope everyone had a good weekend. Hopefully relaxing, hopefully healthy with all those Omicron cases out there. And again, it's time for us to turn our attention back to the markets. So seeing what's going on. S&P futures have just opened. We're basically flat so far, so I'll keep an eye on those as we do this broadcast to see if it gives us any sort of major view one way or the other about which way this market could be headed tomorrow. Again, in general with the futures, it has to be a major move for me to have any inclination because as we know, you could be down 20 points on the ES futures and then be up by tomorrow morning and vice versa. So it doesn't give us a huge indicator unless it's a really significant move. And right now, again, the S&P futures look like they're up about 1 point on the day. All right. So talking about last week, folks, we obviously had a nice rally Friday afternoon going into the weekend. Markets on the S&P closed fractionally positive after a pretty nasty early sell-off, which was a continuation from Thursday's sell-off as well. So again, good recovery. I look at this week as a week of whether or not this market is going to, have a breakdown or breakout. I've talked to you guys about cycles prior, and again, this is my day trading chart, but that's okay. You guys can see the levels. But overall, to me, this is the week. This is the week that is going to determine the next leg on this market. We either bounce here and we could hold up for another week or two before a breakdown, or if we take out the upsloping trend line that I don't have on this chart, but you guys have seen it in the daily analysis video, then we have some big, serious downside to go. All right, if we go to the QQQ chart, kind of the same thing. Again, same thing on the Qs. The Qs actually closed just above that upsloping trend line. And again, I can try to put it in real quick here. There we go. So this trend line right here, you can see we basically opened right at it and closed again back above it. The line's a little bit off from what I've shown in the daily analysis videos, but the daily analysis video line is obviously much more accurate. Bottom line is, this is the week to watch. I talked about how I had a cycle date. The cycle date is officially this week. And again, it makes sense as we get into whether or not this market can actually hold here inside this channel, or does it break to the downside significantly. Okay, in terms of oil showing us that it's kind of pulling back just a shade. Not a big pullback, but again, just a minor pullback. We still on WTI are just off that double top, which is right around $85 a barrel. So that's going to be an interesting level on oil. All right, gold continues to hold up. Right now, gold down 60 cents, but had a pretty solid week last week. Silver also had a decent week last week as well. And copper right now trading down just under a penny, so really not much movement on that front either. Okay. Overall, again, everything that I said in Friday's daily analysis video holds true. Nothing changed over the weekend. Nothing kind of roiled itself up and got crazy. So I think, again, you look for potential bounces in names that we've been accumulating. A name like Square to me is interesting. It's just been beaten down so much. There is technical support down here. AI is an interesting one as well. That stock, again, has been absolutely annihilated. And then I think you continue to look to be generally short the indexes over the next month or two, expecting further downside. So, again, quick trades long on beaten down tech names that have just been absolutely clobbered, while overall the short side needs to be taken in the form of indexes or stocks that have had still major runs that haven't really corrected much. All right, let's get into some questions on this fine evening. Ross mentioning, appreciate how hard you work with all your videos, tweets, and consistent alerts. LABU had highest volume on Friday in 6 years. XBI, LABU seem to have support going back to 2016 at this level with only one break, which was the March 2020 COVID drop. How do you see a bounce in XBI? Yeah, let's take a look at XBI. Let's see what we got on this chart here. So first of all, great reversal on Friday on XBI. And yeah, you know what? I do see a decent level on the XBI here. Like if you put a trend line in right here, this pivot point, which was basically the highs of just prior to that COVID collapse, as you're mentioning, I do see good support there. Yeah, I actually do like this chart. In terms of a technical bounce, it looks like XBI is nice. Now, again, if you play the LABU, you're basically tripling your risk there, so just be aware of that. But bottom line is, yeah, I mean, the LABU or the biotechs basically look like they could get a technical bounce. Anthony saying, what do you think of RKT for a swing trade? Let's take a look at RKT. Yeah, so RKT, remember, was one of these that the Reddit crowd, the Wall Street Bets crowd, had that crazy run on, where I still remember vividly, basically almost a year ago when this thing took off from $17 to $18, and in basically a day or two went to $40+ before crashing back down. Now, it is beaten down substantially. The problem that I am having is that I don't really have any sort of technical level to base a buy off of. So again, according to my chart, I don't really have much going back, more than a year or so on this chart. Let me just flip over to the weekly here. Yeah, weekly doesn't give me much more information either. So again, is it beaten up? Yes. Does that mean it's going to bounce? Not necessarily. I mean, at some point, obviously, it will bounce, but certainly we don't have a specific buy level to look for at this point. What we could look for is a bottoming tail. If you get some sort of daily candle formation that tells us a reversal's on tap, then I think that's what you would react to at that point. Okay? Jonathan saying, hope you had a good weekend. Wondering if you can give a little update on Chegg. Seems to be holding up to the market selling pretty well. Not much volume on the down days, but still does seem to have a trending back down a bit. What's your latest? Sure, let's take a look. So again, remember I took my profits on Chegg in verified investing, but I still hold a position in the live day trading room with that crew. And again, what I see here right now, honestly, is very good price action. So I love when stocks go sideways for periods. You can see a pretty defined move here. You can put a trend line with the lows and with the highs, and you're basically consolidating. So I'm hopeful that that's setting up a bullish breakout. A bullish breakout, first resistance remains at around $34.30. And if it's able to clear that, you could easily go back to about 39 and change. So again, so far it's good. I mean, the chart is a beautiful chart right now. It's bullish. Doesn't mean that if the market drops 10% in the next week that it won't break down. No, I mean, bullish patterns can fail, but I'd much rather have a bullish pattern than not, and that is exactly what Chegg does have. All right. Paresh saying, is Tyson Foods and Philip Morris, do they look overbought? Let's take a quick look at that here. See what we got. We'll take a look at TYN here. And again, I don't think that's Tyson Foods symbol. But we'll look at Philip Morris here, PM. Yes, there's no doubt about it. Looks like since the last little red candle, 1, 2, 3, 4, 5, 6, 7. So 7 count there. You are coming into a double top as well up here. I don't know if it'll get there without a pullback, but I certainly do think it is overbought. I mean, there's no doubt about it that one is extremely overbought. And I would be looking for some opportunity. I like the time count. I just don't have a secondary level there. But certainly a double top at just over 105, I think that would be very, very interesting in terms of a pullback opportunity, potential shorting opportunity. Okay, let's take a look at KWeb. David wondering if he should pick up a little bit more. So KWeb certainly had an amazing move off the lows, sharp bounce. It is now retracing. We don't have a bullish pattern here yet. You guys know I remained bullish on the Chinese stocks. Even on Friday, they had relatively good price action. So I do like that, but I would rather see a bull flag here if you're going to add to your position. The only other opportunity you'd have would be to basically look for gap fills. So there's a gap fill right here at 35.20. If it got back to that, I think that would be a solid level to add where you're very close to your low pivot there as well. So again, in terms of patterns, there's nothing there. I mean, there just isn't a bull flag yet, In terms of longer term, if you look at the monthly chart, it is ridiculously oversold. Weekly chart, ridiculously oversold. And you can even argue on the daily chart, it's still insanely oversold. I mean, look at the size of the bounce compared to the drop on this. I mean, it is amazing. So, yes, I think it's going to go higher, but for adding at this specific level, I don't have anything at this time. Okay? Natasha's saying, I kept the AT&T position because it's in my IRA, so no tax benefits there. I have a 3% profit on it as of Friday's close, debating whether to sell Monday or wait for a gap fill at $28.94. Let me take a look at that. So let's take a look. So AT&T's had a remarkable bounce. Now, I will say this. AT&T is certainly coming into quite a bit of resistance here, all right? So these lows here are resistance. Now, you got above that on Friday, but then you're coming into this area right here. So if based on the charts, this area somewhere in here is where you want to take profits in the near term. All right, doesn't mean it can't go up to that 20, close to 29 level, but certainly this is going to be a very hard level because basically this is a full retrace of this collapse. So if you looked at AT&T, from June all the way through to November, yes, it was trending down, but it wasn't collapsing. It's really starting in November where it started this collapse, and that's what it's undone here. So you're going to have a lot of sellers that bought in this range. You can see all this sideways chop, and they're going to likely start to sell into that now that they're back to essentially break even. So again, it's up to you. It's in your IRA, so you can obviously hold it for a longer period with no issues there as well. But for me, definitely resistance up in this range should be expected. Okay? Abby saying, I got into Humana stock at 360 and so far in the money. Should I hold on until gap fill or get out with the overall market sentiment getting weak? So let's take a look at HUM here. So we got on that one. Wow, that's a big bounce. So in general, when you have a big collapse like that, it's very rare for it to go straight back up to the gap fill when it's such a big move down. Usually what you'll do is you get these inside moves, and then you'll start to come back down, maybe make a higher low, and then move up again, and then come back in a little bit, and then eventually I think it does fill the gap. But the question is, could you make more money by selling here than waiting for it to pull back 50% retrace of that move and then buying again and then kind of doing a little bit of a rinse and repeat there? For me personally, I would err on that side. I'd kind of go in this has been an amazingly big bounce on Humana, and I would take the profit probably. You could always sell half. I mean, that's another way to do it too. And then you could always buy that second half back if it drops. And then if it continues to run, at least you have some exposure as well. All right. Mark saying, what's your upside target on GDXJ for when gold breaks out with the miners running up? Yeah, that's a really hard question. I wish I could tell you where I think it's going. I mean, in general, you get 2 to 3 times on the miners at least on the move on gold. So, if you think about gold going back to 2075, which was that 2020 high, that would imply that the miners could easily go back to their highs around 44, which is a huge move. I mean, that's almost a 50% move on GDX already. And then if you have a breakout, like if you break above that 2020 high on gold, you could easily go to $60 or more on the miners. So again, it's really hard to speculate on that. And you're talking about the GDXJ, which is the junior miners, which is even more volatile. But basically, I would just say to you, if gold is going to break out here of the wedge pattern we've talked about, and then it's going to go to the highs from 2020, I would assume GDXJ or GDX has a good shot at going to their highs. And obviously, percentage-wise, that's a much, much bigger move. Okay? Gary saying, hope you and your family are doing well. Did you ever release the cycle date that was supposed to be in mid-January? Yeah, so I kind of just did that now, folks. So, again, it is technically this week. It's on Thursday of this week, so just be aware of that. That's the official day, but you have, basically starting Monday, I'm going to start to look for something. And, again, the big question is do we float up off of the upsloping channel that we've talked about in the daily analysis videos into that date? Or even, remember, the window lasts until the next week, essentially, which, by the way, the next week is the Fed meeting as well, so that's going to be interesting. But technically, it's Thursday, and let's just kind of wait and see what the market does. I think it's fascinating that the market's hanging right on this upsloping channel, and, maybe that's the trigger. Maybe at the cycle date or right around that cycle date, we see the break point, and the market goes into another tailspin. Be very interesting to watch. Okay? Steven saying, can I look at natural gas? Sure, let's take a look at nat gas here. We're going to look at the UNG here. Nat gas had a big pullback after a huge move up last week. To me, when I see moves like this, folks, where you have this huge move up and then this huge reversal and then a pause day, to me that screams of manipulation, right? So, again, I don't know if it is, but it certainly doesn't give me a good basis for analysis. So for me, it's something where I would say, when you see these big whips, it's just going to make me sit on the sidelines. I don't have an edge. My edge is when stocks get overbought, or ETFs in this case get overbought by a ridiculous amount and come into a major technical resistance, or vice versa on the support side. And honestly, when you're doing a crazy move up and then reversal back down and then a back up, it's just a lot of chop shop. And unfortunately, I took my lessons and I learned them when in my younger career and lost lots of money trying to play things like that. So I'm going to step on the sidelines, and just kind of chill out at this point with that one. Now, it doesn't mean that in a week or two there won't be an opportunity, but at this stage, it just doesn't. I don't have a good enough read on anything here. Peter saying, thank you for your service, up 2,100 on the year. What do you think about SARK? It's an inverse fund of Kathy Wood's ARK. Yeah, isn't that fascinating that there's even an inverse to her fund now? That really is. Tuttle Capital Short Innovation. Wow. So I don't know if you guys saw it, but I tweeted about this on, I think it was Thursday or Friday, that if ARK, ARKK drops to a certain level, I actually think it's a buy. Having said that, then you would probably do the inverse on SARK, which would be shorting it. So let's go to the ARK, because that's really what you want to follow here. So you did get a little bit of a reversal there, but I have a very big level on ARK, really right around, I think it was around $74. So $74 short term is going to be a support level. I could see myself buying if we dump out sharply this week and it gets down there. I could see myself buying there, at least for a quick swing trade. But I do want to be clear that down the line it's going here. All right, this is going to be the bigger buy. So this would be the longer term swing trade versus this would be a very short term swing. Okay, so just be aware of that. Is that you're going to get big bounces because ARKK has, stocks like Tesla in it and other ones. TDOC is in it, which we actually have in Verified Investing right now. So those stocks will have bounces. The fund, this ETF, will get big bounces. But ultimately, I still think down the line, if we're into the bear market that I think we're starting, you probably are going to go a little bit lower after you get bounces at those levels. So vice versa on SARK, you would just probably do the inverse, right? So if ARK hits support, you could short SARK, essentially. Okay? Chris saying, thanks for all you do, guiding us through the markets. Thoughts on Roku swing trade, already long, but out of the money. Sure. Let's take a look. So I was actually looking at Roku over the weekend, and it is actually getting very interesting. I like the reversal on Friday. It looks like you almost got a little bottoming tail there. The stock is very, very oversold, and you really are coming into some good levels here. I mean, these are some major supports. You can see basically this first line here was pierced on Friday, and then you have another support just below at around 150. So I am not in this position yet, but I certainly am keeping it on my radar. I am very, very interested in it. I just need to see a little bit more. I'd honestly like it to touch 150, which would be extremely oversold, and then also into major support. So again, bottom line is I like it for a bounce. I'm trying to be very patient on it, because, again, it seems like it's got that momentum to the downside, in which case I may miss it, which is okay by me. So I think you're all right. I think you're okay to be in that right now. You might have to just deal with it being down just a little bit, but I do think when the bounce comes in, just like on some of these other ones like Square, they're going to be big bounces. I mean, they are going to be monumental. One of the things about bear markets, and for those of you that have traded through them, is when bear markets bounce, they're like rip your face off bounces. They're massive bounces. I mean, then the market just goes back to selling hardcore, but the bounces are very good, and that's why it's so profitable to be a swing trader during a bear market if you can read charts. VJ saying, what's your view on adding LTHM? Sure, let me take a look. LTHM. Let's see what we got on this one. So to me, this looks like a potential bearish pattern forming on Livent Group. You can see kind of here, you got a little bit of an inside bar off of this move down. Now, you did hit major support here, but it's already bounced multiple times off that level. So you're definitely not looking to go long here. And I think the angle would be to be more bearish on it. At this point, it's not a good enough chart for me to short, but I certainly would be looking in the downside direction on that chart in the not-too-distant future. Okay. Richard saying, great job, Gareth. Thanks for helping us all. Could you share an overview of the housing market? Sure. And thank you, Richard. I appreciate the kind words. So overall, let's take a look at XHB here, because that's the builders at least. There we go, the home builders. So we have seen the home builders index starting to come in decently here. Again, as you just look at the fundamental, and this is, usually I'm a technical guy, but I think it's also important to kind of not be just one-sided. It's important to be able to view the fundamentals, right, especially of a market like housing. And I think you have to kind of recognize that you're now seeing mortgage rates that are the highest in almost 2 years. That's going to impact the ability for people to afford homes, which was already an issue considering how much home prices have gone up. So for me, I mean, I'm seeing crazy things in Florida, folks. There was just a story I just read about someone who bought a they bought a home on Bayshore Boulevard in Tampa for like 3.4 million, or like maybe it was 5.6 million, whatever it was, and they literally relisted it that same day they closed for 9 and change million. So when you see that type of stuff, and this stuff you can look at Miami, it's happening there, it's happening really all over the U.S. When this stuff is going on, this is a dead indicator that there's some sort of bubble that's about to burst. All right. Now, again, when a bubble bursts, you don't know if it's that second or if it's in a month or if it's in 6 months. But ultimately, there's no way. This is the same euphoria in housing that was in Bitcoin when it was trading at 68, 69,000. Right, when it just pierced that double top. It's the same sort of thing, and that's the beauty of markets, is that it doesn't matter what market it is, because humans are what's driving markets, whether it's bullish or bearish, markets are going to repeat the same signals, right? Absolutely repeat the same signals. In fact, I was just watching something on CNBC this week, and I just caught a little bit of it, but it was talking about the 1987 crash, and it was talking about how you had this scenario where, the markets had been grinding higher for such a long period of time, and then all of a sudden there was a few chain of events that basically triggered, and before you knew it, the markets crashed. And what they were talking about in terms of how the market was behaving was unbelievably similar to what we're seeing right now. I mean, just so similar with it. The market, they even said the term, the markets would never pull back more than like 3% or, 5%, right? There had never been a big corrective move in the market, like 10%. And look back, folks, we haven't seen that in so long. I mean, it was like the longest stretch just recently in history of the stock market not having a 10% correction until, the Qs obviously did it recently. But, it just reminds me that history, repeats. It really does. And we have to be on our guard. And so when it comes to housing, I would definitely tell you, listen, if you're living in the house and you're utilizing it, then that's awesome. But for me, it's not the time to go out and be buying a house at this point until we see a little bit of a collapse. Because honestly, like think about 2008, 2009. I mean, I literally, for me, in 2012, still in Florida, I bought a condo that is now, basically, more than doubled in price just from when I bought that condo in 2012. But I mean, you got 50% haircuts in the price of a home, and when homes are averaging 500, 600,000, and nice homes are $1 million plus, I mean, a 50% haircut's a lot of money to be saving. So keep that in mind. Again, it's always subject to change, and if the Fed starts to make easy policy again and lower interest rates, but at least for now, I don't see that happening until the economy starts to suffer more. All right. Kevin saying, let's talk about the rotation from tech stocks to value stocks. Do you have a list of solid value stocks to get interested in? Also, in case someone already asked about it, can we talk about LAD and PayPal? Yeah, so we'll focus on the value stock question. Again, generally we want to do just one question per person because otherwise I'll be here all night. But talking about value stocks, Viacom, huge value stock with a great January effect play. And look at the price action on Viacom. So, again, I've already put us in a few of these positions, right, where look at that move up on Viacom. Just remarkable trade to the upside. Now, I'm still in this, but I'll tell you one thing. It's getting to the point where I'm going to look to unload it. I think you might get up as high as 38 on it, but there's so much resistance right in that 38 level that I wouldn't be surprised if it starts stalling out. But, names like Discovery, names like, like that, even IBM. IBM's actually had a good move recently and even corrected, but IBM would be known as a value play. So those are the types of plays. I have the exposure that I want to these names. But yeah, I think that's the best way to be. I think, look for those names that have been beaten down, that pay a dividend that's decent, that have good earnings, trading at a low PE, and those are the names to go. I can take a look at PayPal real quick. PayPal has a bear flag, so I'm actually not liking that chart in the near term. Bear flag looks like it's borderline breakdown here on PayPal, so just be aware of that. I do think there's more support here, but eventually PayPal is going to fill this gap all the way down around $1.29. So that's a lot of downside still on PayPal. Okay. Oh, thank you, Simona. Thank you, Simona saying thank you for all your great guidance. Can you look at NFGC, newfound gold chart? What is a good point to add to a position? Sure, let's take a look. All right, let's take a look at NFGC. See what we got on this one. Yeah, so the first thing that jumps out at me on this chart is that you have a big move up from I guess it was trading around $2.50, ran to 11, right, which coincided with gold going up to about $2,000 an ounce. And then since then it's consolidated, but this is a nice consolidation pattern. It's honestly, it's very reminiscent of gold, the chart on gold. But yeah, I mean, really, I would either buy the breakout or let it get lower towards this area here, and then just accumulate in the lower range of this downsloping kind of wedge pattern, if you will, or consolidation pattern. But ultimately, I like that chart. I mean, that is a nice chart. That's the type of chart that you like. I mean, if you flip over, let me remove these trend lines, but if you flip over to a larger time frame, it probably looks even prettier. Let's look at the weekly. Let's zoom in a little bit on the weekly. Yeah, you can see, I mean, look at that. Look at that big move up, and then this is all inside bar consolidation. So I love it. I like that a lot. Okay. Richard saying, hope you're doing well. I'd like to ask, what are your thoughts on DocuSign? Sure, let's take a look at DocuSign here. All right, so DocuSign, obviously, ever since, COVID's become not a thing of the past, because obviously there's plenty of cases out there, but the market obviously doesn't care too much and looks forward-looking, right? The markets are always forward-looking. So this thing has come in tremendously. What's kind of crazy about this is that, you really eventually will trade down to probably the pre-COVID area, right, which is around $95 or so. There is an amazing buying opportunity, as I do think things just in general are moving online. Having said that, there is going to be some support here. I have to zoom in a little bit here. It's a little hard to see, having to go back so far. But there's around 111, really a good level, around 111. And then there's also a level, well, you kind of hit that one already. I guess you could pick this low here, maybe around 118. There'll be some support. So you might get some quick swing trade bounces where you could hold it for, a couple weeks to a month, get some decent bounces off these lower levels. But right now certainly doesn't look amazing on it, as it's kind of waterfalled over from this bearish pattern that was forming and is now trading to the downside. Okay. Curtis saying U.S. 10-year at 1.818 continues strength. Yeah. And interestingly enough, the futures are not down much. Tech is down a little bit more. S&P futures are only down 3 points. NASDAQ futures are down a little bit more, which makes sense because of the yields. NASDAQ futures down about 40 points. But again, 4 points on the S&P, 3 points there, and 37 now on the NASDAQ futures. Still nothing to write home about in terms of how volatile this market has been. And crude oil down 10 cents, really a non-event there. Gold's down 70 cents. Silver's down 3 cents at this point in time. All right, so we'll continue to follow it and just kind of see. I mean, it's really fascinating markets for sure. Okay. Ronak saying, amazing webinars as always. So good to be here. Can you run by the trades you are in? And I'm also putting these with you. Any other stocks to look at? Yeah, so again, just take a look at the open positions. That's going to give you the best kind of angle about what I'm in. And I think that's the best way to look at it. Much easier than me going through all of them here in this broadcast. But I think for the most part, I'm just looking to accumulate things that are beaten down heavily. Like, we talked about Square, for instance, is one. There's a few others that we've been accumulating. TDOC remember TDOC we had before and then took profit. Same thing with Square, took a big profit. And now we're just getting back in again at these lower levels. So that's what I love about the swing trading environment here, is that when you get bounces, you can make 10+% very, very easily and then just bounce out. And then because the market is so volatile and bearish, you get better or equal entries again, and you can kind of do a little rinse and repeat. But yeah, I mean, ultimately, I think that's my game plan. I still think the overall indices eventually are going to break this upsloping channel we've been in, have a big fall with big bounces along the way. So look for the ones that have already been beaten down to get quick bounces, be in and be out. Otherwise, I think being short most stocks is the way to go. Okay? Oh, thank you, George. Thank you. George saying, thanks so much for your support and congratulations for the great results. I just wanted to ask you if you're planning to cover any of the short positions that you've kept for a while, like Costco, HD, Tesla, Texas Instruments. So I will cover those, but not until the bear market's over. And it wouldn't make sense, right? We're just entering this tightening phase by the Fed. The Fed, again, is worried about inflation because obviously you have the midterms coming up, and people obviously are struggling because prices have gone up so much, whether it's be food or energy or other things. By the way, it's just remarkable. I was talking to someone today who was just closing their drywall business because the cost of drywall had gone up 400%, and contracts that they had bid on like 6 months ago, now they're losing money filling those contracts because the price has increased. I mean, it's just ridiculous, absolutely insane what's going on here with so many of these different things, and the price is just skyrocketing. So the bottom line is, you definitely, for like Tesla, it's going far lower. Home Depot, it's going to go. Costco, I've ripped on that stock for a long time. It started to break down significantly. Like, that's an awesome move down on Costco, right? I mean, this thing was trading near 600. It's now near 500. This is where Costco is going to go. I would consider covering the short right around there, around that level. Could get there very quickly if the markets continue to drop. But certainly I wouldn't want to cover shorts unless there's a technical reason, especially in a bear market. So we got to let those things play out now, especially ones that I've been in for a while. The last thing you want to do is, as soon as it starts going in your direction, just be like, okay, I'm out. We want to let these things breathe a little bit, let them pay us just a little bit. George saying, what broker do you recommend? To be honest, we don't really have a recommended broker. There's almost all brokers out there at this stage, if it's a name that you've heard of, are going to be decent. In general, you shouldn't be paying much, if at all, for trades. So, I mean, it should be zero trades. Now, granted, we've heard about what Robinhood does and what these things do, but I don't care about that. Like a tenth of a penny, whatever it is what it is. Aside from that, I mean, it'd be nice if the platform was solid, but again, almost all of the major brokers out there have good platforms. So I don't think there's a big deal, whichever one you decide to go with. Go with whichever one's going to give you the best deal, as long as it's reputable. Aaron saying, some people are calling for a 40-50% crash in the spiders and other indices. What do you think the likelihood of that happening is? What are the factors that might cause it? So I've been calling for that too, although I don't think it's happening in the near term, right? So I think there's no doubt that is eventually the track that we're going to go on because of the inability for the Fed to ever really tighten interest rates. The Fed is threatening right now. As soon as they tighten once, probably the market's going to freak out, go down 20%, which I do think happens this year. I think we at least are down 20% this year at some point. And then the Fed is going to worry about unemployment rate, rising, and then they're going to back off. And then the market will have a huge bounce again. But eventually, the house of cards is all going to collapse, right? I mean, we have a system that is built on just printing more and more money endlessly. This whole modern monetary theory, MMG, which is what it's called, where these politicians now think that they can just print unlimited amounts. And even the Fed is now kind of subscribed to it without any repercussions. And it's ludicrous. It's absolutely ludicrous. I mean, I just always liken it to, a household, right? I mean, if we ran our household like the Fed runs things or like the government runs things, the credit card companies would shut us down so fast and then we'd be shut off. But, the government can technically print unlimited amounts of money. The problem is eventually the bill comes due in the form of other countries not being willing to buy our debt. And then at some point the dollar collapses and then, shit really hits the fan, excuse my language. So yes, eventually you're going to have an even bigger crash in the markets. The question is when. I foresee 60 to 75% downside in the equity markets. But again, the question is it 2 years from now? Is it 5 years from now? One of the things that keeps sticking out to me is the 100-year cycle. And if you look at the Great Depression, right, the 100-year cycle would be kind of right at the end of this period of 2029. That would be the 100 years from the crash of 29. So, again, is it going to happen a couple years prior, a couple years after? We don't know. But ultimately, I do think it ends up happening. And, I think 75% would not be shocking to me in terms of the downside. Now, how are we going to protect ourselves? Well, first of all, we're going to make a boatload of money swing trading all the way till then. And then likely we'll be short the market. So when it happens, we'll make lots of money in that respect too. Just like Jesse Livermore back then. He just, made incredible amounts of money to the point where the government actually came and begged him to cover his shorts to try to save things. All right, let's take a look at mRNA from Dylan, see what we got on this one here. And, that stock has definitely corrected. I mean, as it should. It was ridiculous, the run-up it had. You start to get into a lot of support right in this range. So I think this is where you start to become interested on a swing trade basis. So I would say 188-ish or lower. It still has another $15 or so, give or take. And then I think you start to get interested. Okay? Paul saying, just joined last week. Appreciate all the insight. Do you still like CGC? Yes, I do. Yeah. Now, remember, CGC is a position in marijuana, right? So my thesis on this is that it's so low at this point that it's probably not going to go a whole lot lower. And at some point in this election cycle, as we're coming into the midterms, I think both sides start talking up legalization. I think both try to court those voters. There's a lot. In all fairness, I think it's well over 50% of the public favors legalization. So I think that's going to start to get talked about. And then the beauty of it is that you could be down 25, 30, 40% on CGC and still make 100% on that trade when that starts to happen. And even if it doesn't happen, at some point, as we all know, marijuana is going to get legalized, right? Whether you're for or against it doesn't really matter. The government needs revenue. And what's an easy way to raise a few $1 billion every single year? Make it legal and tax it. Just that simple. So again, it doesn't matter if you're for or against it. It's the bottom line that the government is going to need more and more revenue as our debt expands and the interest on our debt becomes more expensive, and then obviously all the other things, and you're going to have to see that legalized. So again, whether that's 2 years from now or 4 years, honestly, I don't know, but it will happen. Chris saying thoughts on shorting ExxonMobil. Let's take a look at Exxon here. Interesting potential short. You got to coordinate it with some levels. So you hit this level and this level. This is a lot of resistance up here. Yeah, I actually like this. I would even consider buying puts on this. Might be an interesting put play. But right up in here is huge resistance. And also notice that WTI is at 85 as a double top. So you'd assume a pullback in WTI there as well. So it makes sense that you would get a pullback. If you get a pullback in oil, probably Exxon gets a pullback as well. Okay? All right, let me see what else we have here, folks, as I'm kind of skirting through here. Kurt saying, I'm still holding the VIX at break-even of 28. Do you anticipate it returning north of that level? So I assume you mean the VXX. And the answer is yes. At some point when the SHIT hits the fan for the 20+% correction in the U.S. markets this year, you will see a major move up in the VIX. Again, the question is at what point. But yeah, I do see a big move at some point. The VXX has not had a major move in quite a while, and that's very unusual for it. Even considering the added volatility here, you could make a case that this was a pretty big move going back to late November, where it went from basically $20 all the way to $30. That's a 50% move. But I've seen this do 40 to 50% in a day on VXX, which is incredible when things are really panicky. Okay. Peter saying your take on Bitcoin, your Bitcoin take on going lower after the retrace of 46,000. Yeah, so I'm not even sure. I think it's still going to get to 46,000, but it got to 44 and change. But ultimately, it is going to go lower. If you just look at the underperformance of Bitcoin and cryptos relative to the stock market, and then extrapolate out to a bigger correction in the stock market, it makes sense that Bitcoin and cryptos will take another leg lower. So the next level is going to be 30,000, which will be major support, and eventually I even think it breaks through that. Let's take a look at Ford real quick here, folks. Ford, very, very toppy up here. I do like it as a potential short. I've been eyeing this one all last week, just trying to be patient, trying to look for that optimal time, but it does look like a potential setup here on the short side for Ford. Okay? Alex saying, I sold my position in Rio and am looking for a re-entry. What would be a good re-entry on Rio? Let's take a look at Rio Tinto here. Yeah, what a move up in Rio Tinto. So you're going to have to wait for a big pullback, right? My estimation would be here, and then there's a gap filled here. So somewhere in this area, so you're talking probably $71 to $69. Wait for a pullback like that. And then what's interesting is, you could easily get, potentially you could be forming a cup here. This could be a big cup, and you get that handle, which is a bull flag. That could be what would ends up happening there. Okay? Let me just go through a couple other questions, guys, as we're breezing through here. I got lots of questions. I'm never going to get to them all, unfortunately, and I do apologize for that. Let's take a look. Simone is saying, could you give some analysis on 2020, the 2020 Bulkers Limited, OL? Okay. Looks like it doesn't trade on the U.S. indices, so I don't have that chart. I apologize. But yeah, if it doesn't trade on the U.S. markets, at least on this on TradeStation, I didn't subscribe to other ones. I have it on other platforms, but not set up. Daniel saying, hope you had a good weekend. What are your thoughts on VRM? Let's take a look at VRM here. Yeah, wow, look at that. Vroom. It certainly hasn't gone vroom. Sorry for the corny joke there, but Yeah, look at that chart. Let's see here. Honestly, I don't have anything. But honestly, this is beaten up so bad that I do kind of, weirdly enough, this would be one where I'd like buy a small position because it does look like it could bounce. I mean, this is just absolutely annihilated. Incredible drop on this. I mean, a $70 stock earlier this year or late 2020, and now an $8 stock. Yikes. If you want to be safe, wait for a bottoming tail, wait for a reversal candle, something like that to signal. But yeah, it certainly looks like a beaten up play that is due for a 10 to 20% bounce, which wouldn't even be that much relative to what it's dropped just in the last month or two. Incredible. Matthew saying, what are your thoughts on Intuit? INTU. Let's take a look at that. So Intuit's had a big fall off the highs. Looks like this is going to be your next big support down here. So you're looking at a level of around 25.23 or so. So that would be your first level where I would start to get interested. Let me just see here. There's an obvious uptrend. Yeah, it looks like you're kind of same thing. This line rising up will kind of meet right there. So I think that's an interesting area. Again, I'll reevaluate at that point if it gets down there, see how it looks at that point. But certainly interesting. Yeah, and it does have the same setup as Affirm, as SQ, as SE. The only difference is on those, and this is an important difference, is that Affirm and SQ, and especially SE have done much bigger corrective moves from their highs. So just be aware of that. Like if we look at SE, right? Look at the fall on this thing. It's gone, basically it's erased the last year plus of upside coming all the way down here. A lot of support here, of course, and right in here. So that's why I'm in it again, as I do believe it will bounce. But yeah, just be aware that relative to these ones, and even Affirm's just had an insane drop here. Look at that drop. And by the way, one of the things I love on Affirm is basically this gap fill right there. You should get a bounce on Affirm here. I would be so surprised if it didn't bounce. Granted, markets have done things that have surprised me before, but that to me looks just awesome in terms of a bounce opportunity. Assuming the markets don't crap out, right? It all comes down to the overall markets. Speaking of the markets, last check on the futures. S&P futures are up 1 point. NASDAQ futures down 26, with coordinates with the higher yields here. And Dow looks basically slightly lower here. So right now, again, market's pretty quiet. Let's see where things go tomorrow. Thanks, guys, for coming out tonight. Thanks for participating. Thanks for being awesome, loyal members here at InTheMoneyStocks.com. We appreciate it so much. You guys have a wonderful, wonderful night. Take care.